All right, so when you're looking at a company, how do you figure out what it's really worth? There's the price you see on the tag, and then there's the price you actually have to pay. Today, we're going to peel back the layers and find out a company's true price tag, because trust me, it's way more than just the number you see at first glance.
Okay, let's play a little game. Imagine for a second you've got the cash to buy a whole company. I mean, the whole shebang, the offices, the brand, every single desk. So you go online, you look up its value, and a number pops up. You think, great, that's the price, right? Well, is it really that simple?
So, the first place pretty much everyone starts is, you guessed it, the sticker price. Now, in the fancy world of finance, this is called market capitalization, or just market cap for short. It's the most obvious, straightforward number you'll find.
Let's put some real numbers to this. Imagine a company has, say, 50,000 shares out there, and each one of those shares is trading for 200 rupees. So you do the quick math, 50,000 times 200, and that gives you a market cap of 1 crore rupees. Easy enough, right? So you're thinking, okay, I need 1 crore to buy this company. But that's not the end of the story, not even close. And here's where things get interesting. See, when you buy a company, you're not just getting the cool logo and the patents. Nope, you also inherit all its baggage. And what's the heaviest piece of baggage for most businesses? You got it, debt. That's right. The second that company becomes yours, every single loan, every single financial IOU it has, well, that's your problem now. They're on your books, and you're the one who has to pay them back.
Okay, so let's say our little example company has 60 lakh rupees in debt. So that 1 crore price tag we started with? Well, you have to add that 60 lakh right on top. All of a sudden, the real cost to you has jumped up to 1 crore and 60 lakh rupees. See what's happening? The true price is already going up. But wait, it's not all doom and gloom. Just like you inherit the bad stuff, the debt, you also get all the good stuff. You get the assets, and maybe the best asset of all, the cold, hard cash sitting in the company's bank account. And this is a huge perk. The moment you take over, any cash the company has is now your cash. You can use it to pay down some of that debt you just took on, or you can just think of it as an instant discount on your purchase price. Pretty sweet, right? So back to our company. Let's say it has 20 lakh rupees in the bank. Since that's your money now, you get to subtract it from the total cost. So that 1 crore 60 lakh figure we were just looking at, it just came down. The true price is shifting again. Okay, so we've added the hidden costs and we've subtracted the hidden perks. Where does that leave us? Let's put all these pieces together and figure out once and for all what the real cost of this company is.
All right, let's break it down. We started with the market cap, which was 1 crore. Then we had to add the debt. That's another 60 lakhs. But then we got to subtract the cash, which was 20 lakhs. And, drumroll please, the final true cost comes out to 1 crore and 40 lakh rupees. And that number, that 1 crore 40 lakh rupees, that has a name. It's called the enterprise value, or EV for short. This is the real, theoretical price to take over the company. It's a much, much more complete picture of a company's value than just looking at its market cap, for sure. So, if you want to remember the formula, it's actually super simple. It's just 3 steps. Step 1, start with the market cap. Step 2, add up all the debt. And step 3, subtract all the cash. Boom, that's your enterprise value. Okay, so why do we even bother with all this math? Why does this number, enterprise value, actually matter? Well, for investors, analysts, really for anyone who wants to understand how healthy a company truly is, it's absolutely crucial. Well, the biggest reason is that enterprise value lets you compare companies on a level playing field. It's a true apples-to-apples comparison. You might have one company with a low market cap that looks cheap, but it's drowning in debt. Another might look expensive, but has zero debt and a mountain of cash. EV cuts through all that noise and tells you which one is actually the better deal. It's also the building block for some really important financial ratios, like EV to sales or EV to EBITDA, which help investors dig even deeper. At the end of the day, here's what you need to remember. Enterprise value tells you the whole story. It's not just the highlight reel. It shows you everything, the good, the bad, and the ugly. It's the company's true worth, warts and all. So from now on, whenever you see a company's price tag, I want you to pause and think, is that just the market cap, or is there more to the story? Now you know to ask, what's really hidden inside? Thanks for tuning in.